Good morning, everybody. Hey, welcome to this Tuesday, July 22nd. Hope you're doing well as we continue to look to see what's going to happen in the markets with earnings. Dave will join us here in just a few seconds.
105.7 Light FM. Hey, good morning. I appreciate you being here this morning. We're at 8:41 here. It's 19 before 9. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. And the Legal Beagle Fast Talk means we are doing finances here. What's happening on Wall Street with the assistance and partnership of Phillip Statler from Statler Financial Services. Phillip, good morning. Did I give you time to catch your breath there?
Yeah, I think so, Dave. I hope you're doing well. It is, I was just looking at the calendar. One of the things I have to do to make sure I'm on the right page at the right time. And, this is the last full week of July.
Oh, gosh, you have to remind me of junk like that, don't you? But it is. Meaning next week we start thinking jobs. It's also one of the biggest weeks for reporting for the companies. I think yesterday morning I had like 150 of the Standard & Poor's 500 companies are reporting this week. So we're going to have a really clear picture at the end of the week what the earnings season is going to be like. And we're kind of in the meat of it. And so far, it's given us kind of a respite from tariff worries because yesterday it was kind of a, okay day on Wall Street. The Dow lost 19 points, but that's only 0.04%. I'm calling that flat. NASDAQ eked out a little gain of $8.81, and S&P rather, $8.81. NASDAQ eked out a $78.5 gain. Both of them, though, managed to set new records again. So, I mean, I wouldn't call this a bull market, even though I know it technically is, but at the very least, it isn't bearish by any measure, even with all of the tariff consternation going on.
Yeah, and Dave, I got to wonder how much people are still anticipating that the tariffs won't go through. That there'll be some negotiation and something will come up. They'll come to some kind of trade deal. At the 12th hour.
I'm kind of assuming that too, to an extent, because, we've been saying all along, I don't like that Trump always chickens out meme. What I do like is the premise that Trump's got a habit of wanting to negotiate in public, make the threat public, scare the pants off of everybody. Then he assumes they're going to cave, and we've got an awful lot of those threats. And the result has been that the market has been decidedly unconcerned with all of the tariff threats down the line. On Liberation Day, that big thing on April 2nd, the S&P 500 lost 5%. Well, then we bumped a bunch of stuff up on China, and we had like a 3% drop. Now we started to send tariff letters out on the first week of July. It only dropped 1% on that panic. And now they've been talking about how a week or so ago he was talking about a 30% tariff threat on the European Union, and the S&P actually gained. We're starting to just not respond to all of the public threats, which probably is healthy, but if we actually carry through with any of them, I'm wondering if we're going to have another April 2nd on our hands.
Well, yeah, because let's face it, if any of the, even just the tariffs as a whole, that we're seeing, the baseline tariffs, if that's all that goes through, that's still adding cost to corporate America, which means their profits are going to be diminished somewhat. You hope that they can make it through that without any issues, but at this point, we just don't know. And so far, it seems like we're going through unscathed as far as the market's concerned. But you got to wonder how long we can keep doing this. And of course, if for some reason the end of July the Fed decides to drop interest rates by a quarter point or so, that's just going to add some fuel to the fire.
That's absolutely true. But your point's taken. So far, we're coming through unscathed. We've had that base 10% tariff level now in effect for a full 90 days as of basically the 2nd of July. And for the most part, S&P profit increases have been averaging 5.6% so far on earnings season, meaning, okay, we've survived okay. We had a half a quarter in that while we're reporting these numbers. So far, we haven't had any massive suffering on the publicly traded companies. If this becomes absolute permanent, we have some of those confiscatory ones placed on targeted nations. We don't know. Your point's well taken. But so far, this is kind of turning into what happened during Trump's first trade war that we had with China back in his first term, and we kind of came through that unscathed without any inflation to speak of either.
Yeah, exactly. So it just keeps, one thing after another, and it would be nice when all this is done.
Bottom line is we're kind of solidly into the era of the unknown, and we have no idea, and we're getting conflicting numbers out of conflicting statements out of Washington as well. I mean, the European Union said yesterday that they were planning some massive retaliation if the negotiations with the United States failed as far as tariffs are concerned. And then Commerce Secretary Howard Lutnick ended up saying, "Hey, we think we're going to make progress here," and we're getting optimistic noises out of Washington. So once again, it's the world of the unknown that we're into. Consumer doesn't seem to care. The one report that came out midday yesterday was kind of a weird one, but we're applying for credit more frequently, and that's an indication, they say, of consumer optimism that they won't have to worry about whether or not they can pay it back. The New York Fed took a survey of consumer expectations, found that rejections and discouraged borrowers decreased from February so far. So, we're still going out on a limb. We're still applying for credit cards, still applying for mortgages, and it's not so far, at the very least, scaring us from doing what rationality says we would normally do otherwise. I really don't get it. We're not scared.
Well, and that's an interesting statistic there that you throw out about the credit, but you got to wonder, Dave, how much of that is maybe not new credit, but credit in terms of, these credit cards will offer you 0% for 12 months. How much of that's to take and pay off another credit card they're paying 38% on?
That's true. The macro details of that really aren't included. All we know is we're not afraid to apply for credit.
Right. Yep. Exactly. So I find that one a little interesting, and that could very well be. I mean, people are under a lot of pressure now. If I can, get one paid off and have 0% for 12 months and make a dent in it, then that's that's better off for the consumer.
Oh, absolutely. Other tidbits out this morning they've been getting. Inflation may not be 100% tamed. In one area, it definitely isn't. I've got a headline here. Beef prices are the new eggs. The price,
Yep.
the price of cattle feed has gone through the roof, and that means the price of your hamburger is now up to about what a prime choice sirloin would have been back a few years ago. And $5 a pound for ground beef is enough to scare the average homemaker. Let me see here. Oh, yes, ChatGPT issued some data. They said they're sending users 2.5 billion prompts a day. That's a lot of kids cheating on their homework, isn't it?
It could very well be, but it's summertime, Dave, so maybe not. Maybe they're, other people trying to learn how to use it.
Excellent. Well, that means corporate moles cheating on their company reports. One way or the other, it's going to work. It is earnings season, and I know we got a few companies that reported. A few of them are household words, as a matter of fact. What do you hear this morning, anyway?
So let's look at Coca-Cola. Coca-Cola really topped estimates as far as earnings and revenue. They beat by 4 cents a share, came in at 87 cents adjusted, beat on revenue too. They are slipping a little bit this morning, at least earlier they were. Yeah, they're still slipping about 1%. But it's because one of the flies in their ointment happens to be demand. What they're seeing is their volume, especially in North America, fell by 1%. And they fell even more, I think it was in Latin America, decreased by 2%. Asia down by 3%. So they're seeing some fall off, and so that's hurting their stock today. They also announced they're going to come out with a new version and use actually cane sugar in one of their versions of Coke.
I was going to say that was one of the things that one of my tip sheets was saying was driving them down too, because the price of cane sugar is cheaper than that what high fructose corn syrup that the Kennedy HHS division says is so darned unhealthy for us. So that expectations from the market is that their price is going up.
Gotcha. Okay. Well, that makes some sense there. The other, we had one of the automakers report, General Motors. They also reported they did okay. They beat on earnings, $2.53 versus 244. Revenue up as well. However, they are again one of the companies that even though they're beating, they're down by a little over 2% this morning. Um, yeah, I think most of it is the fear of tariffs. Yeah, 25% is still in effect for like auto parts. And so that they import, which is a lot of them, even though they assemble them here in the United States. A lot of the parts come from overseas, and so that I think is putting some pressure on General Motors today.
And there's always worries on the EVs about the rare earths they use to build the batteries, because that's always been a negotiating chip between us and China.
Exactly. So that's always going to be one of the issues there.
See anything else of any grandiose value?
Well, I'm trying to scroll through here.
I was going to
Looks
say,
like
I know tomorrow we start getting some big names. The Alphabet people, Google are going to report tomorrow. Tesla, Chipotle, we get a bunch of household names tomorrow too.
well, today we've got two builders. We got D.R.
Okay.
Horton and Pulte Group, both home builders. D.R. Horton beat substantially, came in at 336 versus 289. Revenue well ahead of expectations as well. So that has them trading up a little over 6.5% this morning versus Pulte, who also beat, but by not near as much. They came in at $3.03 versus 296 revenue, uh, basically in line with expectations, and they're up about 5% this morning.
Year over year, are they actually doing better than last year on year over year? Do you have access to that?
I did not see any of that information in the short report that I saw
Uh,
this morning.
just kind of
Um,
curious, yeah.
yeah, so they
Well,
the last
we'll
one I
have to.
have for you is Zion Bank. Zion's Bank did well. They beat by a little over 30 cents a share. But revenue was well. They have their quote was, "We're incrementally more optimistic about growth in the back half of the year than we'd previously been," whatever that means. Um,
I don't know whether to call that raising guidance or not. Do you?
no, but they're up 3.3% this morning.
Must be good enough for their shareholders then. Resetting the table, it was a mixed bag yesterday. Blue chips suffered just a tiny little bit. The rest of the markets were up just a tiny little bit. 45 minutes before we open this morning, what are we looking at?
Yeah, it's relatively flat, really, Dave. The Dow Jones Industrial 30 is flat right now. The S&P 500 is up 0.1%. The Nasdaq 100 is flat. So basically, it's going to be a flat. Not sure how that affects the open, but at least we're flat coming in on the futures. On the other side, we've got silver still in the 39 area, $39.45. That's up about 0.3. Gold's up 0.25%. Crude oil is heading down today, Dave, down about a little over 0.8%, sitting at $65.39 a barrel right now.
Ooh, that's first positive indication of a trend I've had when we kind of stuck for a while in there. Looking across the pond, the Asian Rim market generally happy, probably because President Trump wasn't talking about them yesterday. By and large, the Asian Rim markets were all on the green side when they closed this morning. Europe, on the other hand, because President Trump has been talking about them, pretty solidly into red ink. The average European index down by a little over 0.5% halfway through their trading day today. Getting my retirement together so I can plan on retiring instead of just dreaming about it. Sounds kind of inviting. How do I get a hold of you to make that plan happen, Philip?
Yeah, they give us at 863-382-0037. Just schedule a 30-minute phone call where we'll talk about where they are, answer questions they may have about their retirement, and see if they're on the right track to the retirement they always dreamed of. Again, that's 863-382-0037. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And you and me together again tomorrow, same time here on Light. You have a good day, my friend, and I'll talk to you then.
All right, have a good one.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.